Good morning, everyone. Good morning. Hope you guys are doing well. Today is March the 26th. It is a Thursday today. As you can see, overall markets are dropping here in the pre-market. Once again, SPY cues are down in towards our gap fill level that we actually created here over the weekend. We'll talk about that here in a second. But as you can see, overall, right, the war is continuing here. So as you can see, the markets are dropping. The longer the war goes on, it's not really favorable for the markets. So we're going to kind of just gravitate down towards the lows, right? Kind of fill any gaps that we do have towards the downside here as well. What's up, everyone? Good morning. Before we head on to the charts, and before we head on to the economic calendar, what's up, everyone? Good morning. Good morning, B Roots. Good morning, Marcus, P1. Good morning, Victor, Maria, Hosman, Cody, Andy, Lamit. Good morning, Cinna, Janet, Kendra. Good morning, Martin, Robert, Detecto. Yeah, what's up, everyone? Hope you guys are doing well. Let's pull up the economic calendar and check out any of the news that we have coming up, along with the news that we had in the overnight session. All right, let me do this. Okay, so yeah, coming into market open, as you can see here, we do have some red folder news events today. Unemployment, that is going to be at 8:30 a.m. Eastern Standard Time. So for the overall markets, we'll kind of go over some tickers, some charts, and then we will wait for we'll wait for unemployment, and then we'll kind of develop our game plan from there. We have other things, right? President Trump speaking, and then of course we have the revised consumer sentiment here as well. As for the overall markets, the reason for the drop, as I mentioned, is right as the main thing here is that the longer the war does go on, right, it's not really favorable for the overall markets. The reason primarily we had this pop up, yeah, I agree, right? The reason why we had this major pop over the weekend, or sorry, this was on Monday, was because right Trump declared that essentially the war was over. And clearly that wasn't the case. And you can see we kind of had to drop a lot more consolidation. These like overnight sessions were where the big moves were happening, but just a lot of consolidation in the New York session. And as I mentioned, the longer it does go on, we're just going to end up gravitating really back to where we pop from, which in this case is our gap fill level, right? 580, and potentially all the way back down towards that 574. But this is really the main objective, at least so far, which is that full gap fill that we created here over the weekend. So at least this is the first main objective. Qs is actually hitting this right now. We'll kind of talk about the levels moving forward. But in this case, we're just neutral. Right now we're neutral. We had this original pop up, and now we're about to fill this gap just straight back towards the downside, essentially where we were last Friday. But now let's go on to the names and what we have coming to market open. As I mentioned, coming into today, we are just kind of gravitating towards the downside here, at least for the levels and what we have marked out. Let's first start off on the ES. The key level that we have marked out here is going to be this 6620. As you can see, we have multiple touches here. Another key level that we have marked out here as well was our 6680. So overall markets yesterday, we kind of just talked about price most likely going to be stagnant inside of this range. You can be looking for shorts off the highs, right? Potential bounce play here off the lows. Offered a couple nice kind of opportunities, but nothing too crazy in between this range. And now you can see the main move is actually happening here in the overnight session, which in this case we are dropping towards the downside here in the overnight, and of course in the pre-market as well. Other levels that we can have marked out now, we can just mark out this low that we created, and then we can also mark out it's your Tuesday's lows. And as you can see, there's a couple touches here in the pre-market as well. So coming into market open here today, there's a couple levels that we can be looking for. Number one, we can keep an eye out on our 6620. That is our previous day lows. Other levels that we can have marked out here now as well is going to be our Tuesday's lows of this week. So if we do want to see some downside in the markets, what we like to see here is a potential pop and fade here off our 6620 for this continued push towards the downside. Another possible scenario underneath our Tuesday's lows, hold underneath. We can see this push down in towards our 64.40s. So that's going to be one of the key levels that we have for the ES coming into market open. If you do want to see a bounce play here off our Tuesday lows, very much in play for a pushback towards the upside, or now you're going to be looking for longs, the reclaim back above your previous day lows. In this case, it is our 66.20. So that's what we have, as you can see, right in towards a key level, which is one of these gaps that we have created. And as you can see, this is just our Tuesday's lows where we originally bounced from earlier into the week. Now let's go on to the SPY chart. SPY chart here, key levels that we can have marked out is going to be that Tuesday's lows. We can drag this over here now as well. So for the SPY, if we were to remove the key levels that we had that big pop on Monday right in the morning. As of late, right, all the New York sessions have had a fairly tight range. The bigger moves, of course, have been happening in the overnight sessions. For SPY, as you can see, right back down in towards that Tuesday's low. So coming into market open, the key levels that we're going to have marked out, 650. And now we can also mark out that previous day lows here as well, which is that 654. So if you do want to see some downside here in the markets, previous day low rejection for this continuation back towards the downside off that 654. Another possible scenario here is if price gets underneath that 650, holds underneath that 650, we could be looking for continuation towards the downside here as well. So there's a couple scenarios for downside. The best in this case would be that previous day low retest off that 654. If we do want to see some upside here, potential bounce play off our 650, or now it would be the reclaim back above that previous day lows for that continued push back up and towards that previous day close, 657. So coming into market open here, right, just keep an eye out on our Tuesday's lows. We can make this level a little bit smaller here as well, which will just be that 654. So these are the key levels, 650 along with our 654, which happens to be our previous day close. So that's what we have for the SPY coming into market open. Now let's go on to the NQ. So NQ in this case is the leading indice towards the downside. So generally speaking, whenever you have the NQ that is weaker than the ES, it's a good sign that downside is still intact and you're going to see some more pushes, especially on the tech side. The best case scenario for the overall markets is whenever the NASDAQ is leading the ES, that's generally a sign that the tech is going to continue higher. So in this case, right, I would say the Qs is a little bit weaker than SPY, but not by a lot. But in this case, right, Qs is down in towards that full gap fill. So that is something to keep in mind. So for the NQ coming into market open here, really the levels that I have marked out coming into today is of course our previous day lows. And then we have our Tuesday's lows here as well, which is kind of close to this higher time frame key level in this case, which is that 2450 that I do have. So for the NQ, let me just kind of refine some of the levels that I have. Number one, let's just mark out this previous day low level, and we can drag this up towards the upside. Another level that we can have marked out, I'm actually going to refine this, and we can kind of drag this up into that mini gap fill, another touch here, kind of in the pre-market that we had, which was on Sunday. So for the NQ, coming into market open here, it is going to be a little bit of a tough short just because we are back into a key level of support, our Tuesday's lows here as well. The only way we're going to continue to look for some downside is if we get underneath the SPY Tuesday's lows. So for the NQ coming into market open here, just based off of the hourly chart, as you can see, a little bit more consolidation, and now we're getting that push towards the downside. We are right into, as I mentioned, kind of this higher time frame key level of support. So for the NQ, it makes sense if we could see some buyers step in, potential kind of push back up and towards our previous day lows is in play, along with that previous day close that we do have. So keep this in mind for the NQ coming to market open. Of course, longs are in play here above our previous day lows as well. Only way we're interested in continued shorts, it would have to be the break now underneath this key level. So for NQ, either the pop and fade here off our 24,300, or now you'd be more interested in the break underneath. Now it's going to be that pre-market low for that continued pushback towards the downside here as well. If we go into the QQQ chart, this one, similar thesis, right down in towards a key level, which happens to be our 581. As you can see, this is basically our full gap that we created here over the weekend. So as you can see, we have this gap that we created. We have a couple of gaps here on the charts. Most of the times we're kind of filling these gaps. We're about to have another gap down here on the charts, but filling this gap that we created here over the weekend, which as I mentioned is a very key level support, basically down into that 580 here on the higher time frames. And now we're going to have this mini gap back towards the upside. So for the Qs coming into market open, what we do have here is going to be the reaction that we have off our 580. So as you can see here on the 15-minute time frame, 580 is going to be the key level coming to market open, along with our Tuesday's lows. Other levels that we have marked out is going to be all the way back up and towards our previous day lows. So for the NQ coming into market open here today, if we do want to see some upside, we like to see kind of this bounce play off our 581 for this continued pushback towards the highs. Really, that's the only scenario that I have for some upside. If we're looking for some downside, I'm actually going to refine my level here, which is just going to be this 586 previous day lows. As you can see, there's kind of multiple touches in this general area. So I'm going to kind of just refine this 586 previous day low key level. If we want to see some shorts, really the short in this case is going to be that pop and fade here off our 586 previous day lows for that continued pushback towards the downside. So short scenario today is going to be fairly difficult just because we already have this big push in the pre-market session. The lowest risk, of course, is back up and towards our previous day lows. If we get underneath that 581, we can see some more downside here as well, but just with this gap down, it's going to make it a little bit more tricky. Most likely the markets are going to end up having a mean reversion back towards the upside after filling this gap fill here on the higher time frames. Okay, that is the major indices for today. Really, it's just going to be that Tuesday's lows along with their previous day lows. Very similar here on the Qs. What we have here is kind of that full gap fill, very close to that Tuesday's lows. And then, of course, our previous day lows here as well. So now I'm going to go on to the semiconductor ETF. And then I will head on to some tech names here. If you guys do have any charts or any tickers, you guys can now drop them in the chat. If you guys are enjoying this so far, I appreciate it. If you guys drop a like, if you guys haven't joined the free daily watch list, that of course is in the description below here as well. Okay. First, let's talk about the SMH, which is the semiconductor ETF. Yesterday, I talked about the key levels, in this case being our 404. Right, 404, and then of course we have our 380 here, which is another higher time frame key level. Currently, a little bit of rejections here off that 404, and now we're coming back into the middle of the range. So really not too much to talk about here on the SMH, just kind of ranging in between these highs and lows. And now we're back inside the middle of the range, which is this 392. If you go back onto the lower time frames, key levels, if you do want to have some marked out, it can be your previous day lows here, 396. Other levels that we can have marked out, some levels earlier into the week, which was our Tuesday's lows, Monday's lows, 388. So just keep in mind, right, these are the key levels here on SMH. If you do want to look for any sort of reaction, these are your levels. As for the IWM, really not too much to talk about on this one. Similar thing, just kind of rejecting off our key levels here on the higher time frames. In this case, it is our 252. Other levels that we do have is our 246 along with our 240. Another one kind of rejecting off the top of the range, and now, right, kind of dropping here in the pre-market session. Key level in this case is going to be this 246 here. All right, now let's go on to some tech names that we do have coming into today. Let's first start off on Tesla. I do see some questions here as well. that I'll kind of answer some. All right, let's first go on to Tesla. Google showing a lot of weakness. Yeah, Google and a lot of these tech names. So basically, how it works is a lot of these tech names that are showing weakness, like Google and Microsoft, if you're trying to find a bottom, it's going to be very difficult. Just because the overall market hasn't found a bottom as well. So if the Qs keeps dropping, of course, Microsoft and Meta are also going to keep dropping as well, because Microsoft down, I think, like 30% on the year. Meta down like 20% on the year as well. These ones are just going to keep dropping as long as the SPY and Qs keep dropping. So it's only going to bottom eventually when the Qs will find a bottom here as well. So don't try and catch a bottom. If you're interested in, let's say, Microsoft or Meta long term, right? These are good low risk areas, but right, look to kind of dollar cost average into these names if you're invested in long term. All right, let's go on to Tesla here. So Tesla, as I mentioned, kind of filled its gap. I was looking for this kind of gap fill rejection yesterday, and it actually ended up happening, but much later into the day. So for Tesla, kind of talked about one of the key things was looking for this kind of rejection here off our 394, higher time frame gap fill, and then we actually end up having a gap fill back towards the downside, all the way towards our 380s. So that was kind of the key, one of the theses I was looking for yesterday on Tesla. It just happened much later into the session. So we ended up rejecting off that 394 and then slowly pushing towards the downside much later down and towards that 385. And now you can see in the pre-market, breaking underneath this 385. And now we're currently right in towards kind of this 384 along with this 380. So for Tesla coming into market open here today, let's first start off on the daily time frame. The daily time frame, we're currently still kind of rejecting this trend line. So another touch here, had that daily gap. If you're to just mark out this general area, kind of rejecting this previous level of resistance, now turning into support. So for Tesla, as I mentioned, kind of rejecting off this general area, 390 plus kind of this gap fill that we created. Now for Tesla, the key levels moving forward, I'd say on this week, we are fairly neutral compared to some other tickers since we had this nice push towards the upside. But for Tesla, fairly neutral. Key levels I'm going to have marked out now is just going to be that 384 along with that 380. If you do want to see some upside here, potential bounce play here off that 380 for continuation back towards the upside, another break above your previous day low reclaim for potential pushback towards the upside here as well. So that's what I have for Tesla. If you want to see some upside, downside, rejection here off our previous day lows, or now you'd be interested pre-market low and also underneath this 380 for this continued push back towards the downside here as well. So these are the scenarios. Just keep an eye on Tesla, as I mentioned, off our 384 along with our 380. Those are going to be the key levels coming into market open. Let's go into Nvidia. Do you have a max trades per day? I see that you stop at one trade. My max trade usually is anywhere between 1 to 3 trades. That's how many trades I usually take on average. Especially if the market's a lot more difficult, it's very easy to overtrade in these market conditions. So if I don't see what I like, these market conditions, just a lot more kind of mean reversions. And reversals. So something I don't really want to be trading. So usually if I take like a trader day, one trade, and it just doesn't work out, I'm really not interested in sitting at the screens all day, trying to look for any sort of continuation setup. As for Nvidia, this one, a key level that we do have 178 along with our 180, ended up gravitating up and towards that 180 yesterday. So nice kind of retest above key levels, gravitated up and towards our 180, ended up breaking above, but ultimately kind of rejecting here on the higher time frames. And now you can see another one, a little bit of a mean reversion here now as well, breaking back underneath this 178. And now we're also underneath our previous day lows, which is our 177. So as you can see in this case, right here, right at this 177, if you do want to see some downside, previous day low rejection, push down in towards that 175. In this case, that would be that full gap fill. So that is something we could be looking for on Nvidia coming into market open here, is that full gap fill towards the downside. If we reclaim back above our 177, we can see this gap fill back towards the upside, which would be that 178. So a gap towards the upside. We also have a gap towards the downside. Regardless, the key level is just going to be that 177. And based off that reaction, you can look to trade this towards the upside or the downside in this case here on Nvidia. As for AMD, this is the one that's shown a lot of relative strength. Key levels that we have marked out was at 207. We talked about this break above our 207, really next level here on the higher time frame, all the way up into that 218. So yesterday, nice kind of trade up into that 218 here on AMD. Now, if you're looking at this one, just kind of right back at our daily gap here, which is that 220. So if we're to draw out this general area, you can kind of just draw this out, right? That 220 here, nice kind of push up and towards the top of the range. Now for AMD, very much well could kind of reject off the top of the range and kind of just come right back towards the downside, down and towards that 208. So another one, we have a couple gap fills. We have this big gap fill towards the upside, which happened to be with earnings. And then we have this small gap that we created, which was from a day ago. So if we do want to see some upside, right, let's say, for example, we break above this 220 hold, we can be looking for this gap fill, which is that 236 and above. If we reject, then we can see this gap fill back towards the downside, which will be back down and towards that 204. So two scenarios here on AMD. As for the main levels that we can have drawn out, we can just kind of refine this. We can mark this out. Let's do this. 220, and we can just mark out this general area. So for AMD coming into really market open, you can see nice kind of pop, a little bit of sellers kind of stepping in. If you do want to see some upside here on AMD, reclaim back above that 220 is going to be key for some upside up and towards that previous day highs and above. You can just kind of just draw this mini pre-market range. If we break towards the downside, then we can see a push down in towards that previous day lows, 212 here on AMD. So these are the levels that we have marked out coming into today. As for Apple, a little bit more consolidation, really not too much to talk about on this one. Exact same levels still apply from yesterday, 255 along with that 247. Google and Microsoft. So let's take a look at these ones. As I mentioned on the higher time frames, right? Google showing a little bit more weakness, right? Microsoft and Meta here now as well. Let's kind of look at it from a higher time frame perspective. So for Google, really solid push up. Really 2025 was a year where Google just kind of gravitated towards the upside. No major pullbacks here. And now to start off 2026, this one is having a little bit of a pullback here. Key levels that we do have for Google primarily was this kind of retest level. And currently we're breaking underneath it. And now we're flipping more bearish here on Google. Right, basically once we broke structure, right, every pop now is kind of being shorted towards the downside. Next levels that I do have on Google is really this period of consolidation, and really the next major level is down and towards really that 280 along with that 270. So for Google, key levels that we're just going to have marked out in this case is going to be that basically this 296. So we can kind of just drag this general area over. This is our higher time frame key level. As long as now we maintain underneath this, we're going to have a more bearish stance. As you can see yesterday, broke underneath it, right? We kind of retest off our 296, and now we're continuing towards the downside. I'm only bullish on Google now is if we can flip back above this 296 and hold back above. In this case, now every single pop is being shorted. Other key levels that we could have marked out now is going to be that previous day lows. So moving forward here on Google, at least for today, main levels 288, rejection, continuation towards the downside. If we can reclaim back above, then we can see a little bit of a mean reversion up into that 289. Microsoft in a very similar situation, higher time frame. If we're on the weekly chart, is really back at this period of consolidation. But as I mentioned, don't try and find a bottom. If you are going to enter into Microsoft, which is in a good spot, right? Just look for a dollar cost average. In this case, next level is going to be this daily gap that it's most likely going to fill towards the downside. So for Microsoft, really Yeah, every single pop so far is being shorted. Other levels that we do have marked out now as well is just going to be that previous day lows, which we can drag over 370. So for Microsoft coming to market open, as I mentioned, underneath key levels 380. Now we're also underneath our previous day lows here. So if we do want to see continued downside, rejection here off our previous day lows for a push down in towards that 365. If we have some buyers that step in right off the bat, then we could be looking for the rejection here off our 372 for a pushback towards the downside here as well, which is our Tuesday's lows. So either the previous day low rejection or your Tuesday low rejection, which is our 372. As for Meta, this one, another one kind of continuing to push towards the downside underneath key levels here as well. So if you're looking at this on the daily chart, we are coming back into a key level of resistance, key level support, 580. Really, if you can't hold this 580 here on Meta, next level all the way back down in towards our 540. So Meta, you can see this kind of bigger push towards the downside, 540 actually here. So keep this in mind. If you are trading Meta underneath 580, we have some more downside. So Meta, very key spot. Keep an eye out on our Friday's lows of last week, and then you can also keep an eye out on our Tuesday's lows of this week here as well. Yeah, we also did have 830. Let's kind of go on to the unemployment claims. It doesn't seem like it affected the market as much. Let me actually refresh this. So yeah, forecasted 211, actual 210. So basically in line with expectations. I don't really expect too much of a reaction on the overall markets after this big push towards the downside here in the pre-market. As for Amazon, as you can see here on the higher time frames, Amazon, a lot more kind of consolidation in this general area. So really not too much to talk about here. A lot more kind of consolidation until we can break out like 216 or kind of now break underneath this 204, be a little bit more hands off. And then for Netflix, just not able to break above this 94. As I mentioned, we're kind of just forming this higher time frame downtrend break here on Netflix, but until we can break above our 94, I'd be a little bit more hands off here on Netflix, kind of rejection here off this level. If we actually break back underneath, then we could see some more downside, but that's only underneath our 91 here. But yeah, that's all the tech names for today. If you guys do have any more charts or any tickers, go over them for the next kind of 5 to 10 minutes here, and then I will get ready for market open. If you guys are enjoying this so far, I appreciate if you guys drop a like and sub. If you guys haven't joined the free daily watch list, that of course is in the description below here as well. Yeah, the markets are dropping, which is expected. As I mentioned, we have a couple gap fills towards the downside. So for the SPY, if you're looking at this on the regular trading hours, we have room down in towards our 648. As for the Qs, we're kind of right at this gap fill area, 581. So we're just going to pay attention to the SPY, which is our 648. So most likely, right, if we're to look at this coming into market open, we have a huge gap towards the downside, and then we have a mini gap that we haven't filled as of yet. So most likely, the SPY is going to head lower to fill this gap before it wants to reverse back towards the upside if we do end up reversing. So we do expect this potential full gap fill here on the SPY. Qs, as I mentioned, is basically filling that full gap here as well. All right, let's go on to a few other tickers. Do you have an Investport as well, or do you just day trade? No, all my basically day trading goes into long term because that's what is an investment, right? That's where all your everything should be going into. So if you ever have any profits or anything, or in a case like this where the markets are dropping, right? These are good long term areas where you could be looking for ads, right? We're only down about 6% off highs or 7% off highs here on the SPY. But the longer this war goes on, it's actually fairly good, especially for long terms if you're interested, because we are going to gravitate lower. And then right, these are just good opportunities to trade back towards the upside. So I'd say SPY and Qs, right? The best spot, of course, is going to be, if you look at the Qs, right, kind of this 580. And then next levels like 560, right? 540. These are like areas that you want to be looking for. Qs, and then SPY, kind of similar thing. All right, for Palantir, this one just kind of consolidating now after rejecting off key levels. For Palantir, rejected off our 160 a few days ago. Now we're underneath our 156 here as well. So not too much to talk about. It does seem like Palantir is going to break underneath our Tuesday's lows. And now we're just going to end up continuing down in towards that 150 here, which is a higher time frame key level here as well. So for Palantir, really not much to say coming to market open, just kind of ranging in between right 160 along with this 150. Let's go into a few other tickers. So yeah, MU, SNDK, I talked about this one after earnings, now really back into a key level support. So for MU, right, let's say you're looking for some sort of a short kind of scenario where it's right back into a key level support here now as well. So this is what we have for MU, where we kind of have this range marked out, broke the top of the range, broke back underneath, and now we're gravitating down and towards the bottom of the range, which is our 360. So exact level here for MU coming into market open. Yesterday, key levels that I have marked out, previous day lows. We ended up kind of getting that previous day low short 390 for continuation lower. Now we're in towards a key level. Same thing for SNDK. Going to kind of follow along with MU here. But next level here now on SNDK is back down in towards our 620. So levels that we have marked out, 670 along with our 620. If we maintain underneath 660, potentially we can see room down in towards 640 along with this 620. Intel, nice kind of push yesterday towards the upside, but this one's still technically inside of a range, so be a little bit more cautious on this one, but nice pop. You want to see Intel. Now it's really above our 4630s, and of course above that 49 if you want to see continuation. Besides that, kind of consolidating a little bit more. And then for the rest of the tickers, nice pop on Hood yesterday, but now this one's being faded. Things like Hood and SoFi, right? These ones beaten down quite a bit, down about like 30-40% off highs, or in this case, sorry, like 40% year to date, off all-time highs, down about 50%. So if you're looking for a retracement, right, kind of this 50 to 61.8 retracement for Hood, really the best area is this previous level consolidation, right? This is a super solid ad on Hood, really down in towards the 60s. SoFi, kind of similar thing, down in towards, right, 16, 14, good kind of ads for long term. But yeah, as for everything else coming to market open, let's kind of go back onto the game plan for today. So as I mentioned, SPY and Qs dropping heavily here in the pre-market, just kind of back down in towards key levels, right? Tuesday's lows and kind of this full gap fill here on the higher time frames. Lately, right, the same thing kind of every day. Huge moves in the pre-market and after hours just make it for a very difficult New York session open, right? Just a lot more kind of consolidation. So not really expecting too much once again here on the Qs, expecting a little bit more consolidation coming to open, and maybe like a move later into the day for a breakdown in towards our 578 or right consolidation and then the push back up and towards that previous day low. So going to be a little bit more hands off right off the bat on the SPY and Qs, and then we'll wait for some sort of higher time frame setup to form here. As for the tickers that I'm interested in today, right, SPY and Qs themselves off key levels, and then for Tesla, key level that I have marked out, previous day lows along with this 379. And then for Nvidia, let's keep an eye out on our previous day lows, which is going to be this 177. So that's what we have for the overall markets. AMD still holding up. So we'll keep an eye out on this one coming to market open. But really not too many names are bullish. A lot of names that are still staying heavy, right? Microsoft, Google, even Meta are a lot weaker compared to the overall markets and now underneath our Monday's pop that we've had. So if you do want to look short, right, keep an eye out on Meta, Microsoft, and Google. Besides that, for some long side, right, you can just keep an eye out on the indices themselves. Yeah, that is about it for me today. As I mentioned, right, just these bigger moves in the overnight session and in the pre-market, so just be a little bit more cautious come New York session open. Downside, Microsoft, Meta, and Google. And then for some upside, just be a little bit more cautious. AMD is really the only ticker that is strong. And then right, Tesla and Nvidia, you can keep an eye out on those ones here as well. But yeah, that is going to be it for me today. I'm going to get ready for market open here now. So if you guys did enjoy that, appreciate if you guys drop a like and sub. Yeah, with that being said, I will see you guys all tomorrow. All right, take care, everyone. Peace.